Let's take a look at what's happening with SoFi stocks. I'll definitely show you my portfolio where I manage positions and the trades I've made. We'll also definitely look at the volatility, which has increased significantly. I'll also show what the market forecast for this company. But let's start with the basics of the stock. SoFi has grown quite decently by 10% over the week. And the most important event that will happen is the company's earnings report on Monday. We'll keep an eye on it and observe. I've already mentioned in the previous video that before the report, the stocks would likely be in consolidation from $7 to $8, and that's what happened. Now, let's switch to volatility. As we can see, volatility has increased significantly, especially for near-term options. In early and mid-May, volatility reaches 140%. This indicates that the stock movement can reach 15 to 20%. So the stock can either rise to $9 or sharply drop to $6. Let's quickly switch to the volatility smile. Perhaps it will give us an indication of what's currently happening with the near-term options. They're increasing both towards the upside and the downside, meaning volatility is rising in both directions. However, for longer-term options, they're increasing towards the downside but not towards the upside. This suggests that investors are anticipating movement. For the near future, investors aren't factoring in an increase in volatility towards the upside for longer durations. This might be a bit challenging to grasp, but it will help us craft a strategy effectively. Now, let's look at historical and implied volatility. Currently, the white line represents implied volatility, while the gray line represents historical volatility. They're close together, indicating that volatilities are converging. Naturally, implied volatility, especially for nearer expirations, is rising significantly above its historical levels. However, this is expected due to the upcoming earnings report, and once the report is over, things will likely normalize. Actually, it's quite normal when historical and implied volatilities are equal. But as I always say, you can trade not only the assets themselves, but also their volatilities. How can you do that? Let's see. We can say, for instance, that volatility will increase by 20%, and artificial intelligence will calculate some interesting strategies for us. As we see, some strategies have a 70% probability of profit. Let's take a look at one of them, and here's what it suggests buying. It suggests buying a call and a put option with a strike price of $8 for July and selling a call option and a put option with a strike price of $8. So it involves using the same strikes but different dates and expirations. That's how the strategy might look. Again, the strategy is not simple, especially in management. This is just an example of how one can play volatility. Currently, we're playing specifically on the rise in volatility, but I don't recommend following artificial hype like a blogger or any other advice. The most important thing is to understand how the market works, how options work. If you deeply understand this, you will make money. Let's switch to the options trading volume. As we can see, the largest volume is concentrated at $88.59, $10 levels for call options. Also, we have a very large volume concentrated in the $6 to $8 range for put options. But I want to immediately say that much more volume is concentrated on call options. What could this mean? In fact, there is a very large wall here. As we can see, we can't sell at $8 yet. This is partly due to this huge wall in call options. Again, this is not very good because it leans more towards the possibility that the stock may fall after the report. Because again, the trading volume of call options is higher than the trading volume of put options. But again, this is by no means a call to action. I'm just analyzing that some support levels exist. Let's look at my portfolio. What happened over the week? As we can see, I moved 3 put options with a strike of $8.50 5. We have a week left. I was paid $75 for this. That's it. I haven't done anything else. Why haven't I done anything? Because again, I'm waiting for the report. After the report, it will be possible to build a more interesting strategy. And now there's not much point in it because I don't know how to predict price movements. I don't know where the stock will go. Therefore, if I don't know where the stock will go, what's the point of opening positions? To open a position, you need to understand how you will manage it further. I don't understand that yet. Let's sum up today. As of 2024, SoFi shares are currently at $7.87, so they have grown well. At the moment, my portfolio is growing by 2%, while Sofi shares are falling by 1%. Yes, without words, the difference has decreased between my portfolio and SoFi shares, but this is due to the growth of Sofi shares. Let's also look at my strategy for Sofi shares. As we can see, the blue lines are my strategy. The red lines represent Sofi shares. Yes, at the moment, I am outperforming Sofi shares, but my portfolio is growing more smoothly. As we can see, there is a gradual and smooth growth while SoFi shares fluctuate, sometimes falling sharply, sometimes rising sharply. I am more inclined towards a more literate positioning. My task is to manage positions mathematically correctly. Here is the secret of my success. Let's also look at market expectations, what the market predicts for SoFi's stock. If we look at the end of May, in about a month, the market expects Sofi stock to be in the range of $7 to $7.50 5. Also, there is a high probability that Sofi stock will be between $6.50 $8. In total, This is over 35%. If we look further out, for example, mid-July, we see that there is the highest probability that the stock will be between $7 and $8. If we look, for example, at September, there is a very high probability that the stock will be between $6 and $7. That is, think about it, the market is suggesting that in September, the stock will be $6.70, around that. Again, what I always try to convey to you is my philosophy that it is impossible to predict price movements. I don't know where it will go, but arguing with the market is pointless. If the market tells you that Sofi's stock will cost this much or that much, then why argue with it? Again, I believe that you might be right once or twice, but in the long run, the market is always right. Furthermore, if we use mathematical expectations and risk to reward ratios, always need to act alongside the market. I mean that if we work together with the market, move along with it, then the mathematical expectation will be on our side. In the long term, we will profit. That's what I'm trying to convey to you. So we'll definitely wait for the report to see what happened here, what profits or losses this stock incurred. I'll try to describe it to you in detail and tell you about it. I also advise you to watch my video covering all aspects of portfolio management. I'm about to start a new experiment, creating a new portfolio from scratch. And in the first video, I talked about my goals, how my portfolio will be formed, which stocks I will buy, what I will buy. Everything is explained thoroughly. If you have any questions, write them in the comments. Good luck to everyone.